Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to a new week, a new month. It's Monday morning. Looking at the landscape overseas, you have mixed action in Asia, where the Shanghai is down like 1.7%. The HK is down a little bit. And then, the Nikkei is up another 2%, tacking on for its second day, as they were the ones who came out, with the surprise BOJ move to get negative rates, which a lot of people think is not going to be a good thing moving forward down the road. But on Friday, it created a nice catalyst for a few things. Friday, you had big moves in the U.S. markets across the board. Some think that it was pension buying, which it could have been, combined with window dressing, combined with a tight technical pattern. So the question is, what happens this week, considering that January closed only down about 5%, well off the lows from that Wednesday reversal bottom? So do we get some commitment to this move, or do we just start falling back, under pressure? So we're going to have to figure that out, as we'll have levels to outline. So if you go to those levels, you look at the SPX first, you will see that that Wednesday, remember that Wednesday feels like so long ago, is when we undercut last summer's lows. That was your double bottom. This was your 1867-ish, and then remember we talked about 1820. Here was your red dog reversal. Here was your higher low, and then we had this inside wedge formation. Remember that? Talked about it going back and forth. Definitely drove some people to drink a little bit, or frustrated, where you had misdirection moves for 5 days, but that's what typically happens before you get resolution. And then on Friday, you had a really nice move to the upside. So I think most people are thinking 46 handles was a little bit much on Friday, so I don't think many people went overly long, thinking if we gap up, maybe you could short it. If we gap down a little bit, maybe it's buyable. So now the question is, with us down 15 handles, what spot needs to kind of hold, let me draw that a little bit better, to show some commitment to Friday's move. So I would say this little peak here, which is where we failed on Fed Day, right around 1916, would be a good spot. If we could hold this 1916, I know that's probably where I'll be looking to buy a little bit. I would think that would be constructive. If all of a sudden we don't hold 1916 and we come back to retest the upper end besides that wick of this inside wedge, which is closer to 1907, that would be another spot. But by this point, I think most people will be getting hurt because they probably started around here. So I'd be a bit careful. For me, I'm going to probably look around here lightly, and then also look at the landscape. Into this spot, I guess it wouldn't surprise me, but at this point, I think a lot of people would be thinking that this was just your window dressing move, breakout failure of the wedge, and that would probably lead to downside pricing. So we shall see. If you want to look at the spiders, because that's what a lot of people trade, I'll go over those areas because it had a really nice move on Friday. Very similar. You had this reversal, red dog reversal low that Wednesday, a bit of a higher low to trade from, and then you had this inside wedge, which gives you nice points of reference. I know on Friday, I didn't come in long anything. I got long the spiders right around 190.20 because it took out this high, and it made a nice move. A lot of guys were thinking it might get to this like 193-ish and actually pushed above. So for this, I would say same kind of thing as the spiders. This little peak here was 191.56. So I would think if we're going to have some commitment and have some kind of orderly rally into a little bit of higher prices, this 191.50-ish hold. I think we're around 192 now. So this would be your spot. Much below this, I think people will start losing some commitment and get a little frustrated. If you want to go quickly just to see the 5-minute chart to see how it boiled down on Friday, so basically this would be, this is your really high level spot, which we're already kind of breaking, and this would be a spot where we consolidated for most of the morning into that last move into the close. So this is a key spot in my humble opinion. So at this point, we'll see what the story there is. Oil had a major move from $26, $27 almost to north of 35, and it's off this morning. So we'll see where some support comes in. If you look at the USO, you now had your little bit of a move off the bottom. It seemed like it was getting a little bit more orderly, holding the 21-day. At this point, I guess see how it handles this spot. If oil's any good, or if it doesn't want to, create a full-fledged failure, you would think it holds above this 920-ish spot. So right into here, which, we've been now riding the 8-day. Some guys trade the DWTI, so if you want to put that up, that's where the juice is. DWTI, gave you a nice move off the lows, and at this particular point, I would think that, some people might look to short this. I don't know here, this spot would be, what is this? This is 266 to 290. I know it's 30 points, but basically that's what you got to do here. So this would be a spot that some might try and short it, considering that it was just as low as 225. So these are some big ranges. I would only, recommend you guys trading that if you've really been trading for a while and you know how to deal with volatility. So as far as that wedge type formation, though, in the spiders and the S&P, you've seen that across the board. I'm going to quickly go over the Russell. A lot of people were looking for some type of tradable move. You had this huge hammer tail bottom, which was a nice red dog reversal that Wednesday. It was definitely a little frustrating for a while, then broke above. So it didn't take back the 21-day like the spider, so it's not as strong. But I would think that, if this is going to be any good, which again, we don't know if this is any good. We don't know if it was window dressing or et cetera, et cetera. I just drew this a little crooked. You would think, let me go to, I'll just go to the 5 minutes, easier to see. You would think that this spot, okay, would hold. Okay, and this spot right here is somewhere around 101.70. So it did ramp up into the close because of the pension buying or the rebalancing, et cetera. This, I would think, would be the spot that would hold if it's structured and committed and it was actually orderly. But if it doesn't, this would be, your line in the sand, kind of like what I showed you in the spiders. So we are getting through earnings season, and like most time periods, you have your haves and have-nots, and all stocks are usually never created equal. We've had some earnings reports behind us, and some things have changed a bit of composure. Let's go into high beta tech. First one, let's talk about Netflix. Netflix, has been weak. It's been out of play. A lot of guys have been having more success shorting this than buying it, which has been something different. Okay, you had your outside day here. Oh, sorry, hold on. You had a small outside day here to lose some momentum. That was right there. And then here is when you had earnings on this day right there where it failed. It was up, remember that, after hours. I'm like, if it doesn't hold 116, get out of the way. And now it's getting comfortably below the 200-day. So here is your little wedge type or little, lower pivot. On Friday, the market was up almost 400 points, and this did nothing. Maybe it was options related, maybe it wasn't, but to me that's relatively weak. If it gets below this 90.11, really, the next support comes into play, which was your flash crash low, if you just need a point of reference, all the way down here. Okay, so at this point, Netflix has not been a go-to stock. It's been below every moving average. Guys have actually been making more money short than long it. So here's your quick little pivot. As far as Amazon, it came out and wasn't anything spectacular. They had $1 versus whatever. They increased their cost to increase their business, et cetera, et cetera. At this point, I wouldn't overtrade it. All you should know is that here is your low, a little bit of a higher low versus this. I think the street still wants to give it a pass, but here's your gap. It's down 4 points today. See, at some point, if it wants to show that it's kind of, actually the gap, it's all the way up here. That's a big gap. Sorry about that. There might be a trade. If you can handle it, might be a trade above 593. To fill a big portion of this gap. It didn't, act horrendous after that report, but we'll see what happens. The longer it stays in this spot, though, below the gap, the more out of play it can get. So, at this point, just know where that gap is because, if you look at something like Apple, Apple actually, had a few gap downs in the last few quarters, and this time, I guess it was low enough to get a gap fill. So for some people last week, even though they were avoiding it into earnings, after earnings, there was two calculated spots. One was a red dog reversal, and this is why people love a red dog reversal because, it's a point of reference. Okay, down here, it looked as if it was going to break below, this pivot, maybe even break below the prior lows, but did it? No. Okay, it reversed at that 93.45 pivot, which is right here. So this is 34. You could have bought it with relatively riskless type trade. Then it traded above this high and actually traded into the earnings gap and almost filled it. So for the first time, it showed, some people were buying it on a discount. It didn't happen here, okay, and it didn't happen 2 quarters ago, or all the way up here. Remember this one? You had you gapped down, and then this earnings gap was open for so long, it led to a lot of low, much lower prices. So here, I'm not saying it's out of the woods, but a calculated day-and-a-half trade, and now it's down about $1. So maybe, look at it today. I don't have any Apple on. Maybe I'll take a look to see if the buyback is back instituted, et cetera, et cetera. Maybe there is a spot to buy around this 96. So I would say if Apple is any good, okay, today it should hold somewhere between this 95.50 and 96.04 for a trade. That would be, holding higher and a little commitment. So maybe there's something to do there as far as it going, red to green, if anything can. Then you have Google after the close today. Google has been one of the chosen ones, and I know people think that, it's going to do a Facebook type report where they're going to cut everything up into alphabet, and YouTube's going to be tremendous, and all this stuff is true, and it could happen. But again, just if you take the stock into a report, whether it's long or short, you can get blown out of the water. So come up with some kind of strategy to trade it afterwards, or some kind of call spread or calls or puts or put spread. If you look at the chart of Google, it's not like it's oversold anymore. Google, you go to the daily, and it's already come well off the lows. It's already, if you look down here, this was that Wednesday low. Sorry, I can't get my little pencil here. Pencil, come on, where are you? Okay, here is your, this was your low, and it's already come all the way back up almost to historic highs. So this is set up that if it delivers, which it's going to have to deliver, and it's got to be awesome like Facebook was, then you have your pivot here for after hours of 800. So that's your pivot. Here's, support 1. I wouldn't even do that. Support, this is big support. Actually, no, Amazon did kind of the same. So this is, 714 is one spot of support, and here's support 2. Okay, and then you have, this is your pivot resistance. It's got to get above this and stay above this if you're going to do an after hours trade. If it gets above this and doesn't hold this, get out of the way. And, we'll see what happens, because, at this point, Fang has turned into, it's not even, it's gone. Baba came out with earnings last week, and it looked promising, and then they sold it. So, I've been avoiding this stock since it failed at 85, and now you look at it. That day on my morning report, I talked about, can it reclaim or will it get rejected, at resistance, and it got rejected hard right there. And now I don't even think it's worth really trading, but here is your support. If it gets below this and stays below this 65, there's really not much going on down there. So I would take a little care. Remember this gap down. This gap down never got filled, and it's been weaker ever since. Had a tight setup here, and then boom. This is when we were trying to get involved in it, and then I got stopped out, and really nothing since. So setups are setups. Just don't lose more if the setup doesn't trigger. Microsoft also reported last, that's what helped with the enthusiasm of the market. It's down a little bit. This needs to hold this gap, for it to potentially see new highs. This is a chosen one, but make sure you're not just chasing it, because even on this gap after earnings, didn't get much traction. So we'll see what happens this time. Social media. Facebook blew out earnings and had a nice gap and go on Thursday, and then Friday gave you a really nice trade. It was like flattish, and then it went above Thursday's high, went through the 52-week high, and gave you a nice move. So I think Facebook is something that, if anything's going to be strong and you can gravitate to anything on weakness, Facebook is something that could be. This was your gap up after earnings, and then here's when it took out the all-time high and the prior day high, so it gave you a nice trade. So I would think if this is going to be very tight constructive-wise, momentum-wise, it should not get below 1034 and close below it. If this were to come into the 10s today, because I'll probably be buying the 110s if it's there. I have a tiny bit left overnight. And if it fails there, that would be disappointing. If it holds here and goes sideways, there's probably a good chance that they want to keep this thing intact and have something on the move when the market wants to be strong. And this so far, definitely best in breed. There is some news that Apple is doing some kind of virtual product that people might say, oh, that's going to cut into Oculus. But I think the more people that get into virtual reality, the better that sector could be, and the more viable it could be, for being real and being more mainstream, but that's my thoughts there. Same way with the restaurant. You know, if you have 2 restaurants on a block and then all of a sudden there's 7 there, it doesn't take away from the 2. It just creates a nice block of restaurants for traffic to come in. But anyway, let's get into what did I want to do last? Gold. Gold, if you look here, it's been trending up for most of this year. We talked about, can it hold the prior pivot high, which was right here, and it did. So it's still above the 8-day, and it's still moving pretty well. And you know, at some point, maybe it takes back to 200-day with some kind of force. So if you're trading this, just continue to use a little bit of a tier system around it, and make sure it continues to hold the 8-day. And and here's your 21-day underneath it, and there's your 200-day above it. The TLTs were up with everything else on Friday, but had a little bit of a doji. I'm not sure exactly what that means, except for it gives you a point of reference to trade against. Guys got short here. In my note, I talked about covering, maybe buying the 8-day, which has been the trend, and it's still holding. So at this point, it's a little extended. So now see if the TLTs hold above this, which is 126.92, or does it fill the gap? We shall see. So in conclusion, Friday I think was a bigger move than it should have been because of the pension rebuy and algos going wild, and you had a tight setup that expanded. So now we'll see if they take a third back, no big deal. They take a half back, I wouldn't be surprised. But anything more than that, I would think that you have to be a bit more careful of a complete failure. 1916-ish is that spot on the S&P. 1906 is a little bit more of a line in the sand. So so to know those spots as far as the first hour or two. Last week everyone was saying we had to retest the lows, and now this week everyone's saying we might get back up to 2,000. So typically everyone's been somewhat wrong. The consensus always is wrong, it seems like, but at this point, what you did have is that nice 4 or 5 day range. It gave you a buyable move through it. And now the question is, can we show some commitment to that, or does it turn back into a choppy, volatile scenario where you have to just really take your trades fast and not stick around, because then they'll steal your lunch if that's the case. So new week, lots of earnings. On my note, I listed all the earnings for the week and some of the potential catalysts. I'll tune into the virtual trade floor. We'll try and go over a lot of the scenarios with you, and I'll see you on Twitter here and there. So have a good day.